You're watching Inside Automotive with Jim Fitzpatrick.
Hey everyone, Jim Fitzpatrick. Thanks so much for tuning in to another edition of Inside Automotive right here at CBT Automotive Network. Sonic Automotive, number 6 on Automotive News' list of top 150 dealership groups, recently reported financial results for the third quarter. One of the items addressed, their initiative of adding more service technicians. Joining us now to talk more about their earnings, EVs, and the continued need for technicians is Jeff Dyke, the president of Sonic Automotive. You've seen him here before on CBT News. He is a friend of ours. So, Jeff, thanks so much for taking the time out of your schedule to join us on the show to talk about this incredible quarter that you guys have had.
Yeah, Jim, thanks. Always a pleasure to join you each quarter. And it was another great quarter.
Yeah.
We're putting together a great year, even with the headwinds of CDK and the BMW Stop Sale.
Yeah.
We just had another fantastic quarter, so very exciting to see, and we're expecting another big quarter in the fourth quarter.
Wow, that's fantastic. Before we kind of jump into the numbers there, talk to us about the technicians' impact on your bottom line and how close you are to your goal of having 300 techs by the end of the year.
Yeah, we're getting there. We'll hit that number. We've got about 60 more or so to go, but we'll hit that number. And then we'll see how many more we add as we move into 25. But there's no coincidence. We're having record fixed operations gross months just about back to back to back to back. And they're coming on the back of hiring more technicians.
Yeah.
And there's an old adage in our industry that says, technicians are so really hard to hire. They're hard to hire, but it's more about the culture inside the store that doesn't allow you to hire technicians and service managers and other technicians pushing back. And we finally, in March of this year, just drew a line in the sand. We know we have waiting lines. We know we have open stalls. And we know we have opportunities to take care of our guests better. And we're doing that through adding these 300 technicians. So that'll happen. We'll probably take a breath and see where we are. But man, you can't argue with the numbers from our fixed operations perspective. It's just been a fantastic year, and it's going to be an even better fourth quarter. So we're excited.
That is great. Have you guys gotten into the mobile service where you're taking the technician out to the home?
Some. We're adding it, but smartly adding. It's expensive. And where we have a market where the consumers want that, we're definitely providing that service. But more so on the Highline side, our BMW, Mercedes, Audi, the Lexus, those brands, are also willing to pay maybe a little higher margin for that service.
Yeah.
But yes, we're definitely adding it in.
Yeah, interesting. Okay, so let's talk about the third quarter here, which is the numbers are really impressive. In the third quarter, you all reported a net income of $74 million, up 8% year over year. Talk to us about that.
Yeah, good, great quarter, and it really came from all categories. Our new car business was solid and up year over year, even with the number of BMW stores we have as a percent of our mix. Our used car business, pre-owned business was really strong. Our fixed operations business we talked about earlier was amazing. Our F&I numbers were great. So really all categories of the business were pulling in the right direction for us, and we expect that to continue into the fourth quarter. And I attribute that to the great tenure that we have at our company, the playbook processes that we have. We're really starting to feel our own, and it's fun to see our team winning, and it's fun to see the results as such.
For sure, yeah. So total revenues are $3.5 billion, down 4% year over year. Same store revenues down 2%. Talk to us about that.
I wouldn't pay a whole lot of attention to the overall revenue number. Remember, we sell a very expensive item. Pre-owned revenues are dropping, but they're dropping because we're moving from selling $30,000 cars to selling $23,000 cars.
Right.
So prices are dropping, and as a result, you see the revenue drop. It's not as big a deal to me as it is, are the units growing? Is our gross growing? Both those things are happening. And is our bottom line improving? And all of that is true. Sure. And so I pay a little less attention to the revenue stick that everybody talks about. than I do the other categories.
Yeah, and the other categories are the most important, right? I mean,
That's
it's
what you
not as
take.
it's
That's
not
what
as
you
much
take to the
about
bank.
right. The top line is nice, but really the bottom line is what you're looking for, right?
Yeah, you take gross to the bank, not revenue. So,
That's right.
that's the important thing. As long as that's growing, we want used car valuations to drop. We want to move from the $31,000 range down to the $21,000 range. And if revenues drop $10,000 a car, that's perfectly fine. We're going to sell a lot more cars, make a lot more gross,
Right.
and make a lot more money.
Right. Right.
So that's a good thing,
Sure.
but not a bad thing. Yeah.
Sure. Sure. Not to bring it up one more time, but Echo Park segment revenues were 544 million, down a little bit, but of course you had, I think, a record quarter that you were comparing it to, right? On that.
Yeah, oh, our best quarter, you name it, from
Yeah.
a profit perspective, a gross perspective, EBITDA, it was our best quarter we've ever had with Echo Park. And again, it's the same thing. Revenues are dropping because I'm selling a cheaper car.
Yeah.
And that's okay.
Yeah.
We're growing the business. We grew sequentially, and so steady as she goes. We'll see. The fourth quarter will be similar. We'll see how things go as we move into 25, and the pre-owned business revenues continue to drop. The pricing continues to drop. We buy cars and trade for cars off the street at a cheaper price. Then we'll start talking about, okay, is it time to start growing Echo Park again? As we get to the middle to the end of next year and start opening some rooftops that we may have either closed, shuttered for a period of time, or properties that we own that we just haven't opened yet.
Right. Right. So we might see a reopening of some of those that you closed.
You can guarantee it. It's just when. It's not if. It's just when.
Right. Right. Are you waiting to see who wins the Oval Office before you?
Yeah, that's just such an interesting thing. I mean, the world's gone crazy.
Yes, yes.
And you know what? We sell cars. It doesn't matter what side of the aisle you're on.
That's right.
We sell cars to everybody, and we're excited about that. And it'd be nice for it to end so we can buy advertising dollars cheaper, and I don't have to see all that baloney on TV anymore. So it'd be great to get back to business as usual.
That's right. Hey, talk to us about your power sports segment. How is that performing?
Yeah, great. We had our rally, our Sturgis rally. That was our third biggest rally ever in the history of the event, which was fantastic. We're bringing in now technology, websites, advertising and marketing, things that the industry is really not used to.
Right.
In data management. And so we're just improving every day. I just got off our forecast and liquidity call, listening to our team talk about the business and where we're headed with it. We're up year over year in terms of our volume, and that's great to see. Still margin issues. We've got new bike margin issues, same that we're seeing in terms of the new car business on the franchise side. And so, but we can expect that to level out as we move forward, and we'll see how things go. We're remember, this is a petri dish for us. We're learning, we're growing, and we'll see. We'll probably do another acquisition or two in the not too distant future as we get a hold of this. We're looking at a few different things, so we're excited about the business. It's a great way to expand our business and take some of the technology and our playbook processes and move it into something that's a sister business to what we do today.
Sure, sure. And then, of course, last on my list here, and I appreciate the time you've given us, is EV sales. They seem to be trending upward, and that's a good thing, right? What's your take on that?
Yeah, I'd be careful about the trending upward discussion. I hear everybody talking about it, but the incentives on EVs are also way up, significantly up. And what the manufacturers are doing now is they're incentivizing everything they can to drive the inventory totals down that are sitting on all our lots. And that's real important. We need to reduce a day supply. It's about a 15-day supply, but we're selling at about a 7 or 8 day. So don't pay attention to the short-term clips that you're seeing of the growth in EV. It's not real. What that is in the incentives that are driving those sales. Let's see what happens 6 months from now.
Yeah.
Now, I will tell you that the product that's coming from an EV perspective, the 26 models and beyond, much better than what's on the ground today. Much better.
Yeah.
The ranges are longer.
Yeah.
The technology's better. I've been to, it doesn't matter if it's Mercedes or Lexus, BMW, Audi. I've seen their technology, seen what's coming. It's an amazing product. I think that's really going to help the industry, and I think that will help grow EV sales. But I don't think that what we're seeing right now is truly growth in EV. Its incentives are coming along. Day supplies have gotten out of control again. And there are brands out there, i.e. Stellantis, that is just, they've lost their minds. I said this the other day on our call.
Yeah.
It's a study that all of our universities should study on how do you take brands like that and mess them up so badly. It's crazy, and we've got to control day supply. We learned that during the COVID years. If we control our day supply, it's best for everybody across the board. It drives the business. And there's some manufacturers that are doing an amazing job. Toyota, Lexus, BMW, even Mercedes now coming back and doing a pretty darn good job. But then there are others out there like Stellantis that are just have lost control. And so what that's doing is making us give cars away in those brands. And that really hurts the business and it hurts the brand. A lot more to come on this, and we'll talk more about it next quarter, and we'll watch together how EVs perform as we move forward.
Yeah, for sure. And I just interviewed the president of the California New Car Dealers Association, Brian Moss, and he mentioned to me during the interview that the sales of Tesla are way down for like the third quarter running. And his feeling was the fact that there's so many great products offered out there by other manufacturers now that it's hurt that.
I 100% agree with that. There's some fantastic product out there and more great products, as I said earlier, coming. But I think this short-term burst that you're seeing in EV sales has a lot to do with incentives that the manufacturers are putting out due to the day supply that's out there on our lots.
Yeah. Isn't that interesting how when the OEM puts money on the hood, those cars have a tendency to go bye-bye?
They sure do.
Unbelievable.
We want to be able to have them not do that. If they don't have to do that, it means we're controlling our supply and we're running the business the way it should be run.
That's right.
We'll see how they do as we move forward here.
Very good point. Well, congratulations on another very strong quarter. Jeff Dyke, president of Sonic Automotive Group. Thanks for all the time you've given us here at CBT News. Very much appreciate it. Look forward to next time.
Jim, always a pleasure being with you. We'll talk to you next time.
Great. Thanks.
Thanks for watching Inside Automotive with Jim Fitzpatrick.